Hello, hello, hello. Good evening, good morning, good afternoon. You're watching a new episode of Home Place Florida show, and I'm your host, Steve Feller.
Tampa Bay real estate market. Man, it's been a real roller coaster, right? But what's actually in store for 2026? Today, we're going to walk through this big shift to what people are calling a balanced market, and more importantly, what it means for you. So let's dive in.
Okay, to really get what's happening now, you gotta look back. Remember 2021 to 2023? It was an absolute frenzy. We're talking bidding wars, waiving inspections, just, the works. Fast forward to today, 2025, and it feels like the market's hit the brakes. We're in a cool down. The whole thing is trying to find its footing, and we're here to break down exactly what that means for what's coming next. So here's our game plan. First, we'll talk about what this cool down really is. Then we'll jump into the hard numbers, a snapshot of the market right now. After that, we'll look at the bright side for 2026, but also face the headwinds and challenges head on. And we'll wrap it all up with our 2026 forecast.
All right, first up, the cool down. Tampa's real estate market has definitely shifted gears, moving from that red-hot frenzy to a much more balanced pace. But what does a balanced market even look like? What does that term actually mean?
Yeah, a balanced market. It's really all about equilibrium. Think of it like this. There's about 5 to 6 months of housing supply available. That's kind of the sweet spot. It cools off those crazy, frantic bidding wars and creates a much more level playing field for both buyers and sellers. Honestly, it's a return to something that feels a lot more like normal.
Okay, so now that we know what a balanced market is, let's look at the actual numbers. Here's a quick snapshot of the key data points that are defining Tampa Bay at the end of 2025.
Right now, the median home price is hovering around $410,000. And after years of these dramatic, frankly unsustainable double-digit increases, we're finally seeing prices stabilize. This is a huge indicator of the market's new, more predictable pace.
Now, this is one of the biggest changes we've seen: housing inventory. We've gone from the extreme scarcity we saw during the pandemic to a much, much healthier supply of homes on the market. And what that does is it gives buyers more choices and, let's be honest, a lot more leverage.
And here's another super clear sign of the cool down, right? Homes are just sitting on the market longer. That frantic pace where a house was basically sold before the for sale sign even went in the yard, well, that's pretty much over. Buyers now actually have time to think, to breathe, and to negotiate.
All right, but look, a cooler market doesn't necessarily mean a cold one. So for our third section, let's flip the coin and look at the bright side for 2026. There are some very real reasons for optimism in the year ahead. There are really 4 big positive trends shaping things. First, those stabilizing prices, that reduces the risk of any sharp drops. Second, more inventory means buyers have breathing room, and it cuts down on the bidding wars. Third, and this is a big one for Tampa, demand is still strong. We've got strong population and job growth that supports long-term value. And finally, builders are actually adding new construction to the mix to help meet that demand. And here's the payoff for all that. Local forecasts are actually starting to predict a return to some modest home price appreciation in 2026. Now, we're not talking about that runaway growth from before, but more like sustainable, mid-single-digit growth. And that's especially true if mortgage rates continue to play nice and ease up a bit.
Okay, but remember, we're walking a balanced beam, which means we have to look at the other side. So Section 4 is all about the headwinds and challenges, the stuff that's creating some real uncertainty and risk in the market.
The number one challenge, no surprise, is still affordability. This quote from Reuters really nails it. Elevated mortgage rates are just squeezing people's buying power. I mean, even with some recent dips, rates are so much higher than they were a few years ago, and that is a major, major hurdle, especially if you're a first-time buyer.
And here in Florida, we have this other unique and growing pressure. The cost of homeowners insurance and the reality of climate risks, these are no longer afterthoughts. They're becoming major factors that shape buyer decisions, and they're seriously impacting the total, real cost of owning a home here.
We're also seeing some other pressures bubbling up. First, sales are definitely slower than they were at the pandemic peak. Buyers are being more cautious, and sellers are still kind of adjusting their price expectations. Second, we're seeing some early signs of financial stress, things like a small uptick in foreclosures. It's not a crisis, but it's a signal we have to watch. And finally, and this is so important to remember, Tampa Bay is not one single market. What's happening in a waterfront community in St. Pete can be totally different from a new development out in Pasco County.
So, all of this brings us to our final section, the 2026 forecast. Let's try to put all these pieces together and really weigh the competing bullish and bearish scenarios for the year ahead.
So it really boils down to understanding these two competing paths, right? The optimistic bullish case really hinges on mortgage rates easing up, inventory getting back to normal, and that strong job growth continuing. But the bearish case? That's where high costs, rates plus insurance, just persist, economic uncertainty slows things down, and those climate risks start taking a bigger bite out of demand in certain areas. It's a genuine tug of war, and it's happening right now.
So, what's the big takeaway from all of this? The bottom line is that Tampa Bay is in a totally new phase. It's more balanced, it's definitely more buyer-friendly, and it presents some real opportunities. But, and this is a big but, those opportunities exist right alongside some very clear risks that everyone, whether you're a buyer, a seller, or an investor, really needs to keep a close eye on.
And that leaves us with one final question to chew on. In a market like this, one that's not running red hot anymore but also isn't collapsing, what's the bigger risk? Is it waiting around for that mythical perfect time to jump in? Or is it maybe missing the right opportunity when it finally presents itself? That's something to think about.